Good day. My name is Belinda Labatte. I'm the CEO and director of Lomiko Metals. We are an explorer and developer of natural flake graphite in southern Quebec and lithium early stage exploration in northern Quebec. And we're looking to create a made in Canada solution to create a climate success story here in North America.
Belinda, thank you very much for the introduction. Good to meet you, although I did see you very briefly at the PDAC last week, or this week. It's the back end of the week of PDAC. I'm exhausted. How are you?
I'm doing good. I had a great PDAC, met so many people, but same as you, there's just a lot going on. We had a full deck this year in terms of presentations and panel opportunities, and that was great because you can just touch on so many different aspects of the business.
Funny, because I typically work in the copper and the gold space. I'm an executive director of a copper and gold exploration company, and so I was speaking to the copper and the gold community, and there was a great deal of uncertainty about what's going to happen to prices, particularly on gold. When's the love going to come back for the sector? Everyone was feeling so beaten up, and well, actually not just gold. The copper companies are also depressed in terms of stock prices, and there wasn't a hugely buoyant mood, despite there still being a kind of demand for projects from the majors. The big guys are still looking for projects, and I just wondered, what's the mood in the graphite space and in the lithium space? What did you take away from it?
I heard the same thing as you, Merlin, but I feel it's specific to precious metals. And we have to face the fact that the functionality of gold, when you compare it to critical strategic minerals, CSMs, is vastly different. There is an absolute need and justification and an urgent demand for strategic minerals in North America. And so what we're seeing is a lot of questions being asked about our product in terms of how soon we can get it into production, how are we funded, what are the characteristics of our project, and there's just a limitless ability to feed into this new energy supply chain. So I think the mood for projects like ours was, I'd call it a surge in interest. I'd call it buoyant. I'd call it very interested in both the long-term dynamics, but also what are the short-term catalysts that are going to get you there. And in that conversation, it's really talking about what are some of the barriers to developing critical strategic minerals in North America.
Thank you. Well, we will come back to the catalysts and we will come back to the barriers. But first of all, on the identity of the footfall, you had a busy booth, but who were you talking to? Was it investors? Was it retail? Were there any manufacturers that you spoke to?
We had a good mix of investors, a fair number of companies looking for the product stop by. So that would be battery manufacturers who want to speed up the conversations with us, as well as potential funding partners, everything from federal agencies that want to talk about, new opportunities that are being developed to support companies like ours, to individuals from the United States that have while frankly enormous budget. I think the latest number I saw was $440 billion will be invested by the United States Department of Defense in climate change stories such as ours. So a very nice balance, and obviously also private equity and larger investors and corporates that are looking at developing a vertical or a new path in critical strategic minerals.
So you had all of that, or all of these different kinds of people at your booth or meetings on your dance card over the last 4 days?
Yes.
What an interesting mix! An extraordinary array. Let me come then to the barriers, because you've got a small company. The market capitalization is quite low, and yet you've got a kind of a production opportunity. How do you go from where you are today to where you want to be? Let's talk about those catalysts and barriers.
Yeah, I mean, I think we should maybe I'll back up a moment and talk to you about why we're in Lomiko and what the fantastic opportunity is for Lomiko and others in Canada, which is that Canada is the only country in the Western Hemisphere that has exposure to all 31 critical minerals. So we are in a position where we can produce them and export them. And if you look at the United States, they are import dependent on 14 of, I think it's 31 or 32 critical minerals, 100% import dependent. So this is really our time to shine. It's a generational opportunity. And what that means is that because this has only come to the fore now in terms of the need for graphite and lithium, we haven't moved companies from a resource stage to reserve classification. And, as an exploration geologist, you know how important it is to advance those projects from early stage exploration through pre-feasibility and into feasibility study. And so the opportunity is to acknowledge that we can accelerate that process, that we are really well valued for a medium to long-term investor that wants to play in the graphite space and get exposure at a good valuation to a absolute deficit in supply. So we're going to need about 7 to 8 times more graphite in the market than there is current supply, because of the fact that we haven't moved projects like this from the resource to the reserve stage. So I'd say that that's the opportunity and the barrier that has come to light, and the federal government even acknowledged it, which is the lack of funding for the companies that are moving forward. And in Canada, you have access to flow-through funding, which helps you with early stage exploration. Then you have institutional money, which really likes to come in at the feasibility stage, or there's capital there that likes to come in with construction financing or royalties, right? Well, between those two bookends, you've got this phase of moving from PEA to PFS into feasibility, and that requires an amount of capital that has not been available because there's been a lack of knowledge and interest, and I'll say specifically in graphite. So we've spent the last year really getting people up the learning curve on what the tremendous opportunity specifically in graphite is in Quebec, and how to invest now to be able to make those returns, but also be involved in what is a resetting of critical minerals strategic stockpiles in Canada. So I think we're really well positioned, and those barriers are going to be overcome because this is just too important, too amazing of an opportunity not to be funded.
When I look at barriers, I often think about first of all, there's the resource definition, and you said you've got access to flow-through funding to help with that exploration phase. But at the fundamental of every resource project, there has to be a kind of a conversation around scale and grade. You need to have the asset. The asset is going to drive the capital.
So let's talk about the first part of that question, which is the funding from flow-through. We did deploy over $3 million in flow-through last year for a 13,000-meter drill program. And that was infill and extension drilling to move upgrade our resource, and with the objective of converting inferred into measured and indicated. For the pre-feasibility study, you need a reserve. Now, where that sort of ends is that flow-through doesn't help with the optimization studies. So all of what you're talking about to build out the scale of the project, the geotechnical studies, the environmental studies that we need for pre-feasibility are not able to qualify for flow-through, whether it's regular flow-through or the new critical minerals flow-through. So we need a different kind of investor to come in and support that, and that's our work that we have been following through with. And it's also such a great opportunity because now we're able to get to the point where we are telling our customers, we've done the metallurgy studies, we've got a great characterization of this graphite showing low in impurities, showing low in sulfur and ash and iron content, very high in terms of concentrate recovery that we can get from the plant. So up to 99.1%, in fact, which is very high in terms of that kind of quality of graphite just from your flotation process. So those are the things that we've been advancing. And as we move into pre-feasibility studies, we're about 50% of the way there. We need to generate more funding for the balance of those studies and really prove up that 15-year mine life that we have in the PDA.
Okay, great. Thank you. As you're talking, you're reminding me of the times when I have looked at graphite and things kind of gradually coming from the back of my mind, such as one of the challenges of graphite, I seem to recall, is that it's a very specific product that you need to do. You need to almost match your customer to the product or your mine, what comes out of your mine gate, your final saleable product needs to have the technical specifications and the physical and the chemical specifications that match a client. So and the pricing is done almost on a contract basis rather than on a terminal market basis. Am I still correct that those things need to happen?
Well, yes, and I love what you're saying because where we're at right now, the battery manufacturers were not approaching graphite companies even a year ago in the way that they are now.
Yeah.
So just to give you a sense of how we're having those conversations, a lot along the lines of what you just said, which is we're about 5 years out from production. If we assume we have all the financing in place, that the permitting works in a manner that is continuous and there are no delays. So give it about 5 years, which is really matching this very clear road to undersupply that's starting in 2023. So those conversations with the battery manufacturers, when they say, what are you going to produce and what's the grade and what's the tonnage, we can go toe-to-toe in those conversations and say, we want to design our product around your specs. And the whole idea of whether they want concentrate product or they want the SPG, so the transformed graphite into spherical grade graphite, is the type of conversations that we're having now. And so they can work with us from the very earliest stages to see what we can produce by when, and if we have the right partner, it can be built to spec. To acknowledge what you were saying before about the specificity of graphite. Graphite has many uses, and what you are looking for the anode market is a high purity graphite, and it is also not large flakes, so it's the fines. It's a very specific type of graphite, and so certain projects will not work very well for the anode market because it's just going to be that much more cost to either turn it into fines and purify it, or there's a low concentrate. And right now, because there's been no growth in anode, the Chinese have been able to take graphite from the African continent, from Brazil, and from the areas around Asia, Madagascar, Mozambique, take that product, blend it with synthetic graphite, and put that into the EV battery. This is now a structural change where we are looking collectively to move that into a more local, regionalized supply chain. And so what you're looking for with our graphite is it amenable for the anode market? And we have a very nice crystalline flake graphite with a high concentrate grade that does not require that kind of blending that you would see because, as I just mentioned, 95% life of mine concentrate is what we have in our PEA. We have just been able to show we can get up to 99.1%, making it very easy to purify it to that 99.9 that's being looked at. Now, there's other characteristics, but I guess the point I want to make is these early stage metallurgical tests are showing that we can suit the EV market very well.
Surely one can go from large flake or jumbo flake down to fines, but it's harder to go from fines up to jumbo flake naturally, because you can take something which is big and break it down. Your project La Loutre, does it have? And you also mentioned that anode needs a fine product.
Yes.
So what do you have? Do you have a coarse product that needs to be ground, or have you got a coarse product, a jumbo product that can be sold to many customers, and for the anode market you can grind a portion?
We defined that in the PEA already and recently updated that information. We have a very good flake distribution that we could go into these larger flake markets, which frankly at this moment in time are paying more than the anode market or the fines market. Having said that, we're not about today, right? We're about what's happening in this near-term future that we are going to be supplying into. So you have to have a point of view around where you want to go. And for us, that is the market for fines. Now, in the PEA, we saw just over 55% was in that -100 mesh, that fines classification. The recent metallurgical tests that we've done with independent labs, Graphite in Germany and KZA, and now with SGS for more bulk sample testing, has shown we're well over 60% in fines. I believe the number is just over 65% classified to go into the fines market with a 650 kg sample. And that, that lends itself very well to the fines market rather than the large flake. And our point of view on the pricing is really, we're going into a scarce resource market here, a supply shortage. So whereas today you might see pricing of $700 or $800 a ton for fines and $1,500 for large flakes, that inversion can take place, especially if you have a carbon neutral, clean powered product coming out of Quebec.
Because of the hydro.
There's no reason why over time we may not have a premium price, especially for a high purity graphite.
Yeah, gotcha. One of the challenges about the graphite projects, of course, is that not many analysts and market people have got a lot of experience in them. It's quite a new field, particularly in the junior space and the public market space, because it tend to be almost private or in-house, vertically integrated kind of operations, and particularly private. So analysts and investors know almost immediately how to value a copper project or a gold project, but it's harder to value a graphite project. And I think if you can kind of set your parameters on price in terms of, you can say, well, we've got these are the offtake prices we've got, plus or minus, maybe a ratchet that's moving to the spot market. I think that will help, wouldn't it?
It would certainly help. And I come from an ethos where you shouldn't be stopping yourself by not knowing something as a reason to not pursue it, right? We're pursuing this because there's an absolute structural change in our energy supply chain, right? So we have to learn it. And I think that what we have done is created sensitivities around our PEA NPVs, showing that our NPV can go anywhere from 200 million to over 600 million because of this price conversation and where that will go. And people need to, I suppose, sort of get comfortable with the fact that this is a period of disruption. And in disruption, you have a lot of theories and hypotheses that are going to be out there, and you need to develop your own point of view inside of that space of disruption to be able to invest in it. But to not invest and wait, which I suppose is the way some people, may be looking at it right now, really is going to be counterproductive to our ability to reduce greenhouse gas emissions by 2030 to where they need to be. And Canada wants to have every car sold in Canada be electric by 2035.
Yeah.
The only way to get there is by exploring, developing, and extracting graphite and lithium in North America. and doing it in a very agile manner in terms of permitting.
It's great talking to you. It's really interesting. I mean, you're an ex-investment banker. You understand financial models. In your PEA, you use a battery price, a graphite price of $1,000 a ton, and it gives an IRR of 25%. In the uranium sector, what they do is they say, well, the current prices are not high enough to stimulate supply. Therefore, we're not going to look at the spot price today, or 2 years ago it was $25 a pound, and today it's $50 a pound. They say, right, we're going to put in $80 a pound because that's going to bring in the next wave of supply. Given that what you've just said about the long-term demand drivers, well, actually not that long term. 2035 is just around the corner, really. But let's call it the medium to these very strong demand drivers. Why didn't you say, well, let's use a $1,500 battery price, sort of graphite price, and then the NPV on the PEA would look better?
At the time when the PEA was produced, so a couple of things. First of all, we were not with Lomiko at that time. We came in when the PEA had been already completed. And I think that actually a conservative weighted average price, which is what was done using benchmark pricing, is helpful because it sets a framework for where it can go. So what happened at the time was that $916 price is a weighted average price of the flake distribution and the pricing that benchmark could have visibility on in August of 2021. So what is important about that is at that time also, a lot of the peers were using $1,500 pricing because that's what was happening in the market, in the traditional market. I think that you can definitely, apply a larger price, and we've done that in terms of our sensitivity analysis. But the 916 really shows you that the fines were, in fact, somewhere between $500 and $700 a ton. They've now increased over 40%. The fines market specifically within 1 year. 44% in 1 year, which is actually legitimate and in line with what you're hearing in the press about graphite demand and prices increasing 30 to 40% a year. So that's real. Those numbers are real. They are legitimate. What then we need to figure out is, are we going to be selling into that entire market, or are we going to specifically go to the anode market and provide that product only? And those are decisions that we will make, as we pursue the project. But I go back to the opportunity and the view, and where I would like to get to is seeing a premium price for high purity graphite that is responsibly produced, that is a Quebec product and carbon neutral with hydro energy. And we need to really understand the pricing of those externalities, because we've never done that before. The barrel of oil was a barrel of oil, right? There was a very, very undifferentiated perspectives around where it came from because it was traded on the open market. This is different. Everybody is now looking at Scope 3 emissions and what that costs. And so the product that actually registers the carbon intensity and where it's coming from should be legitimately priced higher and be valued more.
Yeah, provenance and the kind of embedded emissions in the generation of it. And if you've got hydro power, as you do in Quebec, and excellent, good. Let's get to the specifics then of your trajectory this year. Your milestones. We're pretty much at the end of Q1. We've got 3 quarters left of the year. What are you blocking out in terms of activity?
Last year was a very active year of building the company. It was our first full year as a Lomiko management team. And it has been amazing to see us move forward despite very difficult market conditions for juniors. So what we did was advance 2 long lead items while also being extremely mindful on community engagement and larger stakeholder engagement, working with different groups in Quebec. So there's that piece. But operationally, we completed that 13,000 meter drill program, and we're now waiting and actively working through a independent, updated NI 43-101 technical report.
For the resource.
For La Loutre, the resource, yes, which has a 15-year mine life, about 100,000 tons per year. And that is now being updated with, we saw some really great assay results, and we've been press releasing those as we go to show people that, in some cases we're seeing over 100 meters of mineralization, consistent mineralization at 7%, over 10% in grade. And we're also showing that there was graphite found in marble. So that means we had done a shoulder sampling, which is to look at non-visible to the eye graphite possibilities, and we found over 2% in the marble. So these things are all feeding into that workflow, which is the updated resource, which is going to come out in 4 to 6 weeks. It's being prepared currently. The metallurgical tests that we started last year, which are specifically to create those technical spec sheets for battery manufacturers, for the automakers, showed a high purity graphite, as I mentioned. It mimicked the flotation cycle, showing that with our recoveries of 94%, we can get 98.6 to 99.1%. These are lock cycle tests in just 3 rounds of flotation, so 3 flotation cycles.
And you've done all that, yeah? Have you launched?
We've done all that.
Have you done another phase of metallurgy, or does that come after your PFS?
That is something that our investors can look forward to with more battery trials. We're also actively looking at grants, which are exceptional for investors because that's all non-dilutive financing. We are working through the environmental baseline, which will allow us to move forward to the next step. And we need to find additional funding to complete the other 50% of the pre-feasibility study. And that's the work ahead of us for 2023. I think it's a really remarkable year because this is the year that graphite is really showing itself in shortage. And so the knowledge base of individuals who are approaching us for an investment is that much more attuned to the market dynamics than it was last year.
Somewhere in your presentation you talk about a pilot plant. That's for next year? That's 2024, isn't it?
Yes, that would need to be funded. And I would say that the way that we want to look at doing business in that region, in southern Quebec, is to change the narrative and the nomenclature around a pilot plant and say, this is an area that really could use a center of excellence. We want to be a open doors type graphite development because people need to see what climate change and energy transition looks like. And what it looks like is taking graphite out of the ground, using it for all kinds of purposes, everything from solar panels to energy storage, and EVs need graphite as a heat conductor. And so this pilot plant concept we're going to be developing as something that we want people to be able to see and something that is responsibly put together and located and where site planning has been looked at from a community perspective. So that would be after the pre-feasibility study, Merlin, and something that we're still, developing right now as a strategy.
Yes, and of course the pre-feasibility study typically looks at lots of trade-off studies. It gives you lots of optionality. You'll presumably be spending a lot of this year looking at what a best development case looks like. The old adage is that a PEA is what it might be, a PFS is what it should be, and a feasibility study is what it will be in terms of, this year you'll be looking for your optimal development plan to come out of of all the studies. I mean, have you got a figure for budgetary figure of kind of what you think you'll need for 2023, the remainder of, and also to give you a bit of a buffer for next year?
In our presentation, we have disclosed that number, and it would be $5.5 to $7 million specifically for Labatte. And we also have a lithium project that's early stage that we want to explore. Also, just before PDAC, we made an acquisition of mineral rights for Carmen from the Quebec group Silquem, which allows us to expand that footprint to the north and allows that much more flexibility in how we look at the site, how we look at the deposits, what can come first, what comes later. So that needs some funding as well to take a historical resource and move it to an updated current NI 43-101 compliant resource. So that hasn't closed yet, but that is another thing that we're looking to do in 2023, in addition to funding that PFS.
You wouldn't turn down $10 million if it got offered to you?
We would look at $10 million from the right partner. I think this year, when I was at PDAC, I talked a lot about the 2 C's of what I see is so important. What I see, capital and collaborations. So collaborations, meaning there's all kinds of different things that are happening in this space that never existed in precious metals. There's grants, there's the opportunity to work with automakers, and we need to explore all of that. And yes, if that $10 million was available with the right cornerstone investor and partner, or if it became available through DoD financing or federal financing, I think it would be very compelling. And for shareholders to have that and de-risk the project from a capital point of view.
And of course, it can be sliced and diced in different ways. I mean, you can get a portion like that and a portion through the traditional mechanisms, yes, contingent on how the cards fall. Good. Thank you very much. What have we missed? What should we talk about? Lithium, you've got the early stage exploration play. The lithium market's feels a bit toppy at the moment. It's just come down from 86,000 to 41,000. But the longer term feels fine. What's your feeling on the lithium, and what will you be doing on your project this year?
Lithium is as important, and graphite is as important as lithium. So if you just go back to basics about the battery construction, the cathode is about lithium. Well, the whole anode is 95% graphite. So investors in Lomiko have exposure to both anode and cathode. The lithium, while it is earlier stage and we have soil and surface sampling happening right now, it's such a great blue sky upside to the portfolio, because it's over 100 square kilometers of lithium potential. That would be pegmatites, tantalum, cesium showing, right attached to the Nemaska lithium belt. And our partner, Critical Elements, has the prospect there. The Rose Tantalum project they're developing, LMR, is just to the south of us. And we're looking at a trend line that just continues from LMR. So for us, it's really exciting to be able to have that early window and a strategic position on that Nemaska lithium belt. And we will continue to do the work. We're earning our way in to up to 70% of that prospect, with the first trigger being 49%. We are looking to do that in 2023. And I think for our investors, it's a blue sky potential to have a position in lithium that over the long term is just so necessary as graphite is.
Good. Well, Belinda, thank you very much. I've learnt a huge amount about your company. You've repositioned my thinking on the role of graphite and the kind of the demand drivers for lithium and graphite, because it's so easy to forget when there are other things happening, such as the demand for copper and the demand for tin. It's a busy space. The whole resources sector is charged with demand for these metals. And I'm thinking about your earlier comment about the precious metals. I think there is actually there is a fundamental need for some kind of monetary stability, but that is a whole other conversation. Let's wrap up on wishing you good luck with Lomiko Metals. And I look forward to seeing the new 43-101, and perhaps when that comes out, we could reconvene and we could go through the technical aspects of that resource. That'd be very helpful.
Absolutely. I encourage people to follow Lomiko on LinkedIn, on Instagram. I myself, I'm very active on social media handles, love to share information. You can ask us anything. We have a hashtag, Ask Us Anything. And that is to get people to really buy into this incredible opportunity we have in North America to generate our own sources of renewable energy. So stay in touch and let us know what you're thinking and any questions you have on our projects.